good morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Cheryl D'Souza. Along with me is Alex Matthew. And Alex, definitely not a pretty picture coming in for the markets this time around. If you see, we got a very weak handover coming in from the US markets. Ditto is for the Asian markets as well. The tech stocks is what weighed heavy on the US markets. Rising bond yields also kind of made the markets jittery, and we're seeing that sort of flowing through our Indian markets as well. So if you see the benchmark indices, both of them are declining with losses of over 1% each. If you look at broader markets, mid-cap as well as small-cap index, they're actually outperforming the benchmark indices, with small-cap index logging in gains of over 1%. If you look at the sectoral indices, is the metal index that is snapped is a 4-day gaining streak. So metals are down in trade. Along with that is financial services. That also has snapped. That also sectoral indices rather has snapped its 4-day gaining streak. So both of them are declining in trade today. Apart from that, you have media index that is holding on with some gains. FMCG, auto are trading flat currently. If you talk about individual stocks among the Nifty index, you have UPL, Adani Port as well as SBI Life that are holding on to some sort of gains. But it's the metal counters, like I mentioned earlier, so it's actually it's fallen for the first time in 4 days. I stand corrected. They've not snapped their 4-day losing streak. They've actually declined for the first time in 4 days. You have JSW Steel that is declining in trade. Tata Steel is down. Also, you have private banks, that's HDFC Bank as well as ICICI Bank, that are declining in trade. So that's on the benchmark indices front. But talking about individual stocks, Alex, what's on your radar today? Which stocks are bucking the trend rather?
Well, Cheryl, you said it. It's wild gyrations that we've seen over the past 5 sessions for India's equity markets. But I think a couple of silver linings to that somewhat dark cloud this morning. The first thing would be that on the benchmark Nifty 50, we're within a few points of double of the 52-week low that we saw, remember, when the COVID-19 pandemic hit. So we're still above double of what that 52-week low was. And the second thing is that the market breadth is actually edging in favor of the gainers. You mentioned that the broader markets are actually doing quite well today, and that has been the case in the recent past as well. So let's actually take a look at some of the stocks that are buzzing in trade. Let's pull up the BNSN cloud as of now. We've got Adani Ports and SEZ, one of the top gainers on the Nifty 50 today. The big news coming in for this counter is that it is acquiring a 31.5% stake held by an affiliate of Warburg Pincus in Gangavaram Port for around 1,954 crore. And what's more, it's also in conversations to increase its stake further. It's in discussions with DVS Raju and family for their 58.1% stake in that port. Let's also look at HDFC. It has reduced its retail prime lending rate on housing loans by 5 basis points to 6.75%. That housing loan market is heating up. We'll bring you a little bit more on that later in the show. There's Mahindra Logistics. It has signed a pact with Bajaj Electricals to redesign its logistics operations. The total contract value of that deal is about 1,000 crore, which is payable over the next 5 years. That stock is doing quite well in trade. Mazgon Dock Shipbuilders is in focus. It's going to commission the 3rd Scorpion submarine Karanj on the 10th of March and has commenced the sea trials of first ship Vishakhapatnam of project P15B, which is due for delivery later this year. The upstream oil companies are in focus: ONGC, Oil India, Reliance Industries, to name a few, and also the downstream companies, in fact HPCL, BPCL, also the gas companies. And that's because the OPEC is meeting today to decide on whether to impose supply curbs in April. Saudi Arabia, remember, has ensured that those supply curbs have stayed in place. It'll be interesting to note whether that continues in April. And also with the US supply coming back in, with the supply coming back into the fray, there's also the likelihood of downward pressure on crude. There's also JSW Steel and Tata Steel that Cheryl already mentioned, some profit booking coming into some of those metal counters. All right, let's go straight to our guests then. Kunal Bothra and Vikas Sethi joining us today. Kunal Bothra is coming in today with, I think you did quite the interesting chart on the bank Nifty. I want to ask you about that. But first, what are your top picks, your high risk and low risk ideas for today?
So good morning, Alex. Good morning, Cheryl. Good morning, everyone. Two buy calls which I would suggest at this hour, and expecting that even with this gap down for the index, it's very different kind of a behavior in terms of stocks, because typically there is always a rush towards profit booking when you see such a kind of a gash down on the index. But surprisingly, this is a different kind of a behavior. So I'm expecting that probably there is some buying which is still left into many of these stocks, and which is why I believe that there's a possibility that few of the stocks could probably come back and hit back the previous highs or continue the momentum which they have seen in the last few days. So two buy calls. First one, which I'm suggesting, is a buy on Grasim. That stock, I believe, was looking extremely strong. We saw in the last 3 days, we saw a completely different charging up move for the stock, moving up from 1200 levels to a 1300 plus in just a matter of couple of trading sessions. And now the stock is holding above this 1300 mark. So I believe Grasim could be a good medium term or a short term bet from a medium risk or moderate risk point of view. Would expect a target of approximately 1450. So expecting another 10% upside from current levels and stop at approximately 90 mark. The second stock which I'm suggesting is one Laurus Labs. Now again, as I said, the very specific mid cap names are the ones which are ending and so deep as such. The stock had been just flattening since last 2-3 months, trading at this band of 375 plus or minus 15-20 rupees. But I think with today's surge of momentum, it seems that the stock has finally come to an or the consolidation has finally come to an end, and the stock could restart an uptrend for itself. So a stock which has done exceptionally well, and a stock which now seems to be coming out of a consolidation. So buy on Laurus Lab, targets of 400 and stop loss could be kept at approximately 355.
Kunal, I forgot to say good morning to you, and good morning to Vikas as well. Vikas, thank you so much for joining me. What are your high risk and low risk ideas for today?
Good morning, Alex. Good morning, Cheryl. My ideas would not be low risk or high risk. They would be long-term wealth creation ideas. I would recommend investors to be buying into them from a long-term point of view. I would like to recommend two mid-cap ideas. The first stock which I would like to recommend today is a very strong company. The name of the company is Philips Carbon Black. It's an RP Sanjeev Goenka Group company. It's India's largest manufacturer of carbon black, which finds application in rubber, plastics, then coatings and cables. This company has done exceedingly well over the past few quarters. If you look at their December quarter results, they were pretty solid. Profits went up from 70 crores in the December quarter of 2019 to 125 crores in December quarter of 2020. The company also paid a dividend of 7 rupees, which works out to a dividend yield of close to 4%. I'm extremely bullish on the stock from a long-term point of view. They've recently done a brownfield expansion also, and the results of that would be reflected in the results of the current quarter. And they're also undergoing a greenfield project in Tamil Nadu, which would also go on stream pretty soon. So I'm bullish on the stock, and I think one should be buying into the stock at the current levels of around 210. And my targets in 9 to 12 months' time would be 275 rupees on the stock. Recommend to investors today is a mid-cap idea. It's the name of the company is Techno Electric, which currently trades at around 320 rupees. It's a company which is into power infrastructure. It does EPC contracts for power companies. It also undertakes operations and maintenance contracts with them. This is again a pretty solid company. If you look at their December quarter, they were pretty robust. Profits went up from 32 odd crores to 56 crores. The company has solid fundamentals, a very strong order book of around 2,500 crores, which gives adequate revenue visibility. Stock trades at pretty reasonable valuations, and I think this stock would do well over the next 9 to 12 months. So I would recommend it to be bought at the current levels of 320 with a target of 425 rupees.
All right, so those are the long-term wealth creation ideas coming in from Vikas this morning. It is Philips Carbon as well as Techno Electrical. All right, and I'll take it back to Kunal. Good morning, Kunal. And like Alex also mentioned earlier, that you have a very interesting chart this time, interesting chart finding on Nifty Bank this time around. So what is it in a chart buster segment that you like to show us this time around?
So, banking index, of course, has been one of the backbones for, our market, specifically in the last 2 months, where we've seen a renewed vigor into the banking index. But, surprisingly, in the last couple of weeks, the banking index has gone to a bit of a downward drift. Now, there are two important points which I would want to highlight. One of them was the previous Friday when the bank Nifty had fallen by 1,600, 1,700 points. That has led to a formation of a gap down. So if you can see that there has been a gap pattern for the banking index, which is taking resistance at 36,500, 36,700 zone. So if you look at the last 3 days, start of this week rather, the previous 3 days, we've seen a rally on the banking index, approximately 1,500, 1,600 points. We marginally closed that gap and we've taken resistance back again after today's correction on the banking index, down by 700 points. If you look at it structurally in the last 2-3 weeks, as you can see that there has been a falling channel pattern for Bank Nifty, which means both the resistances on the falling channel as well as on the gap, which is there on the charts as well, coincides at 36,500, 36,700 mark, which means in effect that this could be a very important and a stiff resistance for Bank Nifty. But at the same time, for a new trend to begin on the banking index, it has to break past about this confluence of resistance or a double resistance at this zone. So if the banking index has to see a renewed kind of a price action going forward, then there has to be a breakout about 36,500, 700 mark. And once that happens, I for one believe that there is a much higher probability that the uptrend in Bank Nifty could not just continue, but it can get much more accelerated. Even a possibility of a new high and a crossing about that new high could be a fair possibility for the banking index. So very important resistance zone, 36,500, 36,700 zone, from where we turned yesterday. And I believe if we break out, say over the next couple of days or by next week, then I believe that there should be a much stronger and bigger up move for the overall Bank Nifty.
Interesting points that you make there, Kunal, on the charts for the Bank Nifty. But staying with the sector, we actually had market veteran Rahul Basan speak to us just a short while back. And he says that he still finds plenty of opportunities in the big, well-run banks in the country. And he says that banks, very interesting, are becoming like tech firms that are able to take deposits. Here's what he said.
Banks are becoming bundles of... They're essentially, deposit takers with a regulatory architecture to protect the deposit holder, and then they're transaction enablers, and they're risk assessors, and they have some kind of customer UI, and all of those, to my mind, are becoming more and more technology plays, and really, it's to my mind, a bank is becoming more like a technology company. Which is allowed to take deposits. And I think that the ones who transform themselves along those lines are going to do very well from a 5-10 year perspective. But right now, as we speak, I think the ones with the strong balance sheets and the relatively conservative accounting will do very well.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come back, we'll be back with the viewer queries where Kunal and Vikas will help resolve them for you. So don't go anywhere, stay tuned.
Welcome back to Buy Now, Sell Now on ET Now. This is the part of the show where we get your questions answered, and we've got an interesting one to start with. This one's from Biju. Biju has bought Kaplan Point Laboratories, the stock he bought at, I think, pretty high levels, Kunal. I'm coming to you first on this one on the charts. He bought this in 2017. So that is, I think, when the stock was at its peak. And he says that he's averaged the stock at 355. As of now, on the charts, how does it look?
I think, Alex, it looks fairly balanced. It's not a stock which has been a high-flying stock, at least in the last 3-4 months, what I can see on the charts for Capital Point is that from 600, 650, the stock has drifted lower to 450, 460 zone where it's currently trading. But it's not a, it's not a bad chart because, from 2020 lows, when the stock was at 240 to 50 rupees, it's been 4-5 months of strong price uptrend and then a consolidation. So these are good patterns to look at it in the entirety, where you see a strong rise on the back of volumes, then a downward drift or consolidation where the stock goes through a natural mean reversion process. So I think all that seems to probably have happened for Capital Point. I think if you've averaged at lower levels of 355 approximately, then I believe that you should hold on to your investments over here. And I think it's more to do with time-wise breakout. So I think it's just a matter of time that when the stock would break out. Sometimes it takes maybe a couple of months. Sometimes it could take maybe a couple of quarters. But once that breakout happens, the rally and the pickup which we'd seen start of 2020 for the stock from those 250 levels, I think a similar paced kind of rally could be seen on the upside. So my suggestion, hold on.
All right, hold on is a technical advice coming in from Kunal, but let's also get a fundamental view. Vikas, how do you see this company? Because if I look at the Q3 numbers, operationally, seemingly, according to the reports that I read, was more or less in line with expectations. A 20% year-on-year increase in revenues. You had EBITDA margins coming in at about 30.6%. So it's not looking bad, is it? But how do you see the future looking for this company?
Yeah, Alex, actually, I like the stock. The fundamentals of the company look pretty good, and the December quarter results were also pretty robust. The investor has done the right thing by averaging the stock at close to around 355 rupees, from where it has already gone up close to 110 rupees. So I would concur with Kunal and have a similar view on the stock. I'd recommend a hold on the stock, and I think he should give some time to the stock, and it would certainly give substantial upside from the current levels in the say next 9 to 12 months.
All right, that's the view coming in from both of our guests on Capital Point. Moving on, let's get on board our next viewer query, and this is from Sethu Ramalingam S from Chennai. He's written to us saying that he's bought 150 shares of Banco products, averaging it at 201 rupees per share. He wants to know whether he should sell, average or hold the stock. Kunal, I'll come first to you. Banco products, a stock that not most of us are aware of. We've rarely had viewer queries on at least Banco products. But if you see last 52 weeks, the stock has really done pretty well, 89% uptick in the last 52 weeks. Currently, if you see, the stock is trading at around 156 odd rupees or so. So what's your call coming in on this particular stock? What should our viewer actually do for this stock?
I think you can hold on to your investments. It's a mid-cap name, but then the last 10-12 months have been quite steady for the stock. It from the March 2020 correction, the rally was very feeble for the stock, very gradual. But then I think in the later half of 2020, is where the rally intensified. The stock moved up from 80 levels to 130, 140 in just a matter of couple of months, and then now it's going through those gradual uptick yet again. So it's a stock which is moving into different paced uptrend. So sometimes it's very slow and gradual. Sometimes it gets more pacey. The recovery seems to be more durable. Volumes are strong. So chartically, I think the setup is quite polished for a stock like Banco products. So stock, in fact, in the recent few weeks as well, has not gone through a very strong bout of volatility. It's gone through those mild phases of correction, sideways, and then tends to move up higher gradually. So again, I would say a classical stock chart, I would suggest a hold. And I think if the horizon is somewhere closer to 1 year, 2 year plus on the stock, then I would expect closer to 180 to 120 as the potential target range for the stock.
All right, so hold is a call coming in for Kunal for Banco products, saying for 1 to 2 years, if that's the time horizon that you're looking out for. He sees the stock go up to 180 to 220 rupees per share. Vikas, what's your take on Banco products? Fundamentally makes sense to continue to hold on to this particular counter?
Yes, Adil, I also have a similar view. I would maintain a hold on the stock. The valuations look pretty reasonable at 10 times its trading 12 months EPS. The company is into auto component. It is mainly focused on engine cooling and seating systems. It is pretty good clientele, and the company caters to industrial segment also. So I like the stock, and I think one would be advised to hold on to the stock at the current levels, and we could see substantial upside in the coming months or quarters.
All right. The next question that we have is on a counter that I think is quite interesting. Magma FinCorp is the counter that we're going to be talking about, Kunal. And Ankush Sharma bought Magma FinCorp on the way up, and I'm glad for him. He bought at levels of 77. The stock has gained about 200%, and we all know why, right? We are looking at a change in ownership taking place. Mr. Poonawalla is, or rather his firm is looking to take control of this company. But on the charts, how is it looking? It's still a small cap company, but I would think that interest in volumes would have increased over the past few weeks.
Well, absolutely. So it's very, very rare to see such kind of charts building up very well for themselves. Yes, the last couple of months have been very, very fruitful for the stock, but if you look at it gradually, I think from the 2020 lows when the stock was at 20 rupees and sub 20 levels, there was this interest on the stock towards volumes. So yes, from 20 to 40, it took almost 8-9 months to try and climb the stock. But from 40 to 120, 130, it just took the last couple of months. So that's what typically strong volume formations, they tend to give you sort of a pre-insight of where the tilt towards the prices could lay forward. So I think the charts for Magma has just about got into a bullish zone. What has actually happened is because of this recent pace of the strong price uptrend, it's possible that for the next 3, 4, 5, 6 months, the stock may remain a bit more low. It could be susceptible towards some natural phases of corrections. It's coming into overbought indicators on the short-term charts. So all of those classical points of corrections could probably play out for a stock like Magma FinCorp. But then, if you have a much longer-term time frame, and if you're looking at maybe a time frame of 3 years plus, 5 years plus, then such are the kinds of turnaround stocks where you should look to bet upon. So extremely bullish on Magma FinCorp from a longer term view, but from a short term view, I would expect that possible that if the market goes into a downward drift or a corrective mode, even this stock may go through at least a 10 to 15% correction from current levels.
All right, that's an interesting point coming in, and I want to know, Vikas, whether you concur on the fundamentals. Outside of the headlines where there's a change in ownership, Mr. Adar Poonawalla is a big name. Outside of that, if you look at the business of this company, is it worth considering for a long-term hold?
Alex, my answer would be no. Ever since the name of Mr. Adar Poonawalla getting into this company came up, the stock has done exceedingly well. But I think the investor has bought it at the right price and it's sitting on substantial profits. I think he should be booking out at the current levels. And I would prefer stocks like an L&T Finance or an M&M Finance, which have a pretty solid track record, are pretty well-managed companies, and even an AB Capital could be also considered. So I think the investor could book out from Magma FinCorp at a profit and invest the proceeds in one of these three companies, and I think that would comparatively give him better returns over a period of time.
All right, so divergent views, not often that we find that takes place, but of course this is actually one of the stories of 2021. Do stay tuned though. I want to thank both of you, Kunal as well as Vikas, for joining me on this and us on this program. Thank you so much for sharing your views, and we look forward to talking to you again very soon. Viewers, do stay tuned. We're coming back with a lot more on the other side of this break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And PSU banks, they've actually seen a stellar rally coming in. At least for this quarter, the PSU banks are up about 40%. But you have Morgan Stanley that's come out with the fresh note on the PSU banks. And what are they exactly saying? Vivek is here to take us through the details. And Vivek, Morgan Stanley looks upbeat on the PSU bank space as well.
Well, Morgan Stanley today has written a very interesting note on the entire PSU banking basket. In fact, what they've done is looking at most of the state-owned entity banks. What they're saying is that all of the balance sheets for these banks have actually improved quite significantly, and bad loan formation, according to Morgan Stanley, for these banks should actually moderate going forward. What they're saying is that at this point of time, they continue to prefer SBI, and they're seeing continued structural challenges in other state-owned entity banks. What they're saying is that these challenges could limit re-rating going forward, despite the fact that most of these banks are trading at very attractive valuations and are significantly undervalued when you're comparing it to the private peers. What they're saying is that valuations are cheap, and which is why they went ahead and upgraded Bank of Baroda as well as PNB to an equal weight stance. They stay underweight on Bank of India and Canara Bank, given the low profitability that these banks enjoy. What they're saying is that when you're talking about the state-owned banks under their coverage, the balance sheets have improved materially. And if you're talking about, the capital tier 1 ratio, state-owned banks under our coverage is now at 9.6% versus 9.1% in FY20, and which is why they believe that given the fact that valuations are cheap at 0.4 to 0.5 FY22 estimates of book value, you're actually looking at this being a very good time to buy most of the financials, especially the PSU financials. At this point of time, Morgan Stanley continues to prefer SBI and moderately prefers both BOB as well as PNB because they've upgraded it to an equal weight stance.
All right, interesting insights on some of those PSUs, particularly on the banks, right? And in fact, that brings us to the next leg of this conversation, which is on housing loans. We've been speaking about housing loans over the last few weeks, and we spoke to SBI's management about it, the fact that they hit the 5 lakh crore mark on their housing book. They now control about a third of the housing loan market, and that's quite a chunk, but they're not satisfied with that. And at that time, we were speaking about the possibility of an interest rate battle in the housing loan market, and that seems to be panning out. In what we've seen most recently, of course, is the largest mortgage NBFC, that is HDFC, has cut its benchmark rate by 5 basis points to 6.75% with effect from today. It's still slightly higher than what SBI is at. SBI is currently at 6.7%, but there is a conditionality attached to that. It's loans up to 75 lakh for salaried women borrowers. And well, a lot of their loans are in fact below that level. So you can say that they start their loans at 6.7%. See, we've seen anecdotal evidence that there's a housing boom, but it is in fact the best time to be out looking for a property and in fact to be going for a housing loan. Let's also look at some of the other rates that are out there right now, and you could potentially see some of them coming further lower. Kotak Mahindra Bank announced that it was cutting its rate to 6.65%. You have HDFC that is, I told you, at 6.75%. Axis is also at 6.75%. A few of the others are slightly higher though, and you could see banks like ICICI Bank reduce their lending rate to match SBI and in fact some of their private peers. Now, if you already have a loan ongoing and if you would like to reprice your loan, if you find that there's quite a gap, then perhaps it's a good opportunity for you to consider doing that as well, especially if you've got quite a long maturity left. There is a charge associated, but banks like Kotak Mahindra Bank are actually encouraging you to go ahead and do that. They've said that 6.65% is what is applicable on the transference of balance of your home loan as well. So it's a good time, Cheryl, to be out in the market looking for a home loan and indeed looking for a house.
Definitely, Alex. Looking at the rates, they're pretty enticing, to go out there for home shopping this time around. And you're seeing a different sort of war intensifies, like the home loan rate war is intensifying. You can see the various banks and housing loan companies, housing finance companies come and reduce their loans. So definitely an enticing one. But let's move on from banks and housing finance companies to the IT space. And according to Economic Times report, Infosys has won a $500 million all-digital deal from Google to provide customer service and engineering support. The scope of work for Infosys ranges from customer service and language support. So that is one of the key deals coming in for Infosys. And moving on, we caught up with Dollar Industries MD Vinod Kumar Gupta to discuss about managing COVID-19 related impact on supply chains. He also shared his take on whether digital networks will help in supply side disruptions. Listen in.
You know, you've talked about how the demand has been buoyant and has come back in a big way, but what is the situation on the supply side? Are there any constraints or challenges? Maybe you witnessed it initially when the unlocking happened, or are there any continued headwinds or challenges that you seem to be facing even now?
Well, of course, there were challenges in terms of supply chain during the early phases of the pandemic. I mean, of course, there was a complete lockdown for almost 45 days. Nothing happened. I mean, the movement of the entire population was restricted. After 45 days, when they started, the government started allowing industries to work, of course, with certain covenants and the conditions. And of course, then there were, of course, some challenges even for that next 45 days. But after that, as the economy started opening up, there are no more challenges right now. Right now, the supply chain is doing very good, and we have been able to cater to the market demands in due time, as we were doing pre-COVID period.
If you're just tuning in, welcome. If you've been with us for the last 40 minutes or so, well, welcome back. We are on Buy Now, Sell Now on ET Now, and I've got quite the interesting update for you. We asked you on social media a quiz question. The quiz question for today was not the easiest one, I must say. Which segment has the highest share in exports in the Indian chemical industry? The options were specialty, polymers, inorganic, and petrochemical intermediates. So not the easiest question. The answer was specialty chemicals, and that's perhaps the reason why the entire specialty chemical space has been buzzing over the past year or so. More than that, in fact. The winners of the quiz competition, in fact, and the champions of this particular edition were Mukesh Kumar Agrawal, Mani Kumar, and Manish Sharma. Congratulations to the three of you.
And with oil prices doubling since the March lows, will the OPEC that is scheduled to meet today agree on cooling down the hot crude market by raising the production? Analysts actually expect Saudi and Russia to go ahead and agree on a hike in the output. My colleague Mubina is here to take us through all the details. And Mubina, what are we expecting out of this meeting? Very crucial, looks like it.
Well, for now, of course, there's no clear steer on how much supply the OPEC coalition will come back with into the market. But remember that I think what's really driven the market in these last couple of months is the way Saudi has been voluntarily cutting its output with the aim of, providing stability to oil prices or even giving it a boost. It clearly seems to have worked because Brent did hit $65 per barrel. But apart from that, we have seen the WTI just about at $61 per barrel. We saw a massive surge yesterday because the US recorded a big drop in inventories. So that is something that, did cause oil prices to move. Remember, Saudi, Russia, the most influential OPEC coalition members did hold talks on Wednesday, seeking common ground on production. Riyadh urges caution, but Moscow is asking for members to increase supplies according to a delegate. Of course, remember that we are no longer where we were lower in terms of expected demand. 1 year ago, things have definitely improved. Prices have improved. So now, of course, Russia wants that they get back into production mode. Saudi wants a little restraint. We'll know by the end of today what the final outcome is of this meeting, and this will give some direction to the markets as well.
Absolutely. Thanks so much for that, Mubina. We'll have to watch out for Brent crude. In fact, it's been trading above $60 per barrel as of now. Let's move on to another story now. We've been tracking the Franklin Templeton episode since it began in the start of last year. We've got an update now. SBI MF, as you know, has been given the mandate to liquidate the assets that are remaining on the books of those 6 mutual fund schemes of Franklin Templeton, as much as 17,000 crore rupees. We spoke, in fact, I spoke to the executive director of SBI MF yesterday, and here's what he said with regard to the process that will be followed, and in fact what's likely to happen at the start of next week, and how that's going to pan out. Listen in.
Perception has definitely changed. The things which were untouchable now we can find better buyers, more buyers for those kind of papers. As I said earlier, I mean, the portfolio we had definitely, though the process is yet to be approved by Supreme Court, because we have to file our SOP in the Supreme Court, and once it is approved, we'll start the process of liquidation. Around 50-60% we should be able to liquidate within 1 month or so. So that we feel that that's possible. We should be able to buy good buyers for those papers.
What is the timeline that we're looking at from now on? When does the SOP essentially get submitted? And once, assuming that we have approval, how quickly can we move forward?
No, last time, if we go by the last time when we filed the SOP while making the disbursement of cash available, it was approved with the consent of all parties on the same day. Going by that, and we feel that we will be filing in the SOP maybe early next week, and immediately thereafter, we are hopeful that the same will be approved immediately, and the process will start the moment we get the approval of Supreme Court.
All right, and with that, it's a wrap on this edition of Buy Now, Sell Now. It's a goodbye from me as well as Alex. So stay tuned. Market at Noon coming up next.